Hey, Forex fortune hunters, welcome aboard again. Tom Wilmot speaking. And what we're going to do today is continue our series on Trend Magic, the indicator in Metatrader that's very popular. And the last time we were together, in the previous video, we put Trend Magic together with our old standby, the Chandelier Stop, to create a new indicator template called Double Whammy. You see that on your screen here. Today we're going to do two things. We're going to play around with some different time frames and talk about trading it. And we're going to go from all the way from scalping to longer term charts. And then in the final few minutes of the video, stay tuned because we're going to add yet another indicator and combine that in. And the indicator is the Itchimoku Cloud. So stand by and we'll get underway in just a second. Okay, folks, let's set the stage. Sorry for the old croaky voice here in the middle of wintertime with my bronchitis. But in any event, USD.JPY, we switched over to that pair because on Tuesday and Wednesday, the Fed's meeting at the end of January, and we're going to see about interest rates and the Fed's balance sheet, and there's some anticipation about that. And as you can see from last Friday, we had a move higher in the dollar, and then a drop-off later in the U.S. session, a pullback here, but then a continuation to the downside on late Friday afternoon, and that continued to the downside with a minor pullback here on Monday, and then down to the session lows, down here in the 109.15 area in terms of the value, the number of yen it would take to buy a dollar. So, bottom line here is that we have on our chart the Chandelier Stop, which could act as a stop for us here. If we were in a position, for example, here where we were in a down trade, this would take us out of the trade. Unlike this situation right here on this 30-minute chart swing trade, where we'd be in a position where we wouldn't be taken out of the trade, we'd see a nice candlestick formation here to the downside, a shooting star, and then we'd say, okay, we've closed below this Trend Magic line, and we had a move of 23 pips to the downside. And once again, measuring risk versus reward, this upside was 9 pips. This downside was 26 pips. So really we're in a situation where you'd like to see at minimum 2-for-1 return, risk to reward. And also, in this case, we're up around 3. Now, this is in a period of time when, quite frankly, the whole yen move is not very stupendous. From the high Monday to the low, let's see what we got going on here, to the low, is just a matter of about 30 pips. So there's hardly anything to write home about as the market is looking forward to the Wednesday announcement. Now, for sure, I think, given that the potential is for no rate increase, probable, and some kind of continued discussion about a reduction of the balance sheet, that looks, from a perception point of view, as if it's a loosening strategy rather than tightening. I don't think that's quite the case, but in any event, that's where there has been some downward pressure. A couple of points on this in terms of trading. Remember last week, or 2 weeks ago, when the Brexit vote took place in Parliament, the real action and the interesting action that was kind of anticipated was the downside move on the Great British Pound versus the yen and the dollar. And that occurred in advance of the vote, as everyone had a perception of what was going to happen. So perception is a place where you can trade. You want to try to stay out of that craziness tomorrow afternoon, Wednesday. Just don't get involved at all. I'll try to stand aside and wait to see what happens as the market reacts to the Fed announcements. Okay, now let's change this around a little bit here. What we're going to do with this is take a look at a 5-minute chart. And let's change around here and see what's happening. Notice that we're in a situation here, once again, where we don't have very many pips to work with, but still in all, if this is the big move up and then a pullback, but not taking out the chandelier, this is that 5-minute chart. Up to the high is 13 pips. If you're just scalping, it's a perfectly legitimate way to do it. Likewise here, pull down, and what happens after you get to the red You want to wait for the pullback. And here was a trade I took this morning, which was up into this band and then quite a nice drop downward, pull back again, drop downward to the low of the session. Now you can also play around with the tools like this one, and you can see that it wasn't until you began to get here that you had this turnover in terms of the white trend magic and the white chandelier suggesting an upturn. Okay, so now we're over here, and basically we're just in the middle of this range, and we're just biding our time to wait, I think, until we see what the announcement's all about. Let's take a look at a different pair here just to see what's going on. That's a different 3 events indicator I'll tell you about another day. But bottom line is, if we come over here to Double Whammy, we can see that on our 1-hour chart, we've had quite a good move to the upside in the euro. This is back in January. Then a pullback, pull touch, couldn't hold it. Down we went. Quite a lot of volatility on these 1-hour charts. And notice that in Metatrader, these are the day breaks here. So there's the 24 hours between one day and another, and that would be a 1-hour chart here, okay? So right now we've been very volatile, but notice, let's take a look at this one, which was from last Friday when the market really launched itself moonward here. What I like to do is take a look at this. So let's go to the first candle after we took out the chandelier. And what we're going to do is drop down 30-minute and then down to 15-minute. Oops, sometimes it repaints, so not to worry. Just kind of move over and go with it. Back up here. And sure enough, on our 15-minute chart, we had a really nice move on the EUR.JPY on Friday afternoon. This little bit of red was right here, but we did not take out the chandelier. We got a really nice, legitimate bounce off the chandelier down below, back up above the trend magic. And sure enough, we had a move on Friday afternoon before the weekend of 85 pips. Nice move. And that is using our double whammy indicators pulled together into a nice template. Now, I'd like to introduce, just in the last few minutes here, before we leave you today, I'd like to introduce the whole notion of the Itchimoku Cloud. Let's get rid of this, and let's suggest that we're going to now have just one. Let's see what we got going on here. Okay, now we're back to a very basic chart, and what I'd like to do is to tell you about Itchimoku, and that would be indicator here, and under trend in your regular default. Come over here, Ichimoku Kinku Hayu, and this is a Japanese indicator system that has been around since the rice trade 150 or 200 years ago, and we're seeing it's as accurate today as it's ever been. I'm going to add this in, and what I'm going to show you here is that I have changed the basic. Here's the moving average lines that the Itchy uses here. I've made those lines none in Metatrader. In other words, no color. All I really want is to use my own multiple moving averages and the cloud itself, the Itchimoku Cloud. So this gives you an idea how this works. And basically now what we've got is a situation where when you're above the cloud, you're in a positive vibe. And when you're below the cloud, obviously, you're in a kind of a different situation. Okay, backing up here. Now what we'd like to do is to say, let's come back and let's go to our double whammy. Now what we're going to do is do that same thing again. Plug in the trend indicator, the Itchimoku. Once again, without the bands itself, we're going to be using our own. Now we can see how powerful this could become as we've extended double whammy to include Itchimoku. We break through the chandelier, we move higher, we pull back, we're below this, and typically that's what will happen each time you get this kind of a move to the upside through the cloud. You'll get a pullback of some sort. And once again, this isn't a very unstructured market this week because of announcements and so forth, so it's all over the place, but still you can see there's some nice trades to be had. Here we go from here to here. This 23 pips on the EUR.JPY. All right, and now let's take a look. We could even drop down to a 5-minute chart if you want to do some scalping. You can see here we did not have the pullback that we'd be looking for here, so I'd leave that one alone, even though we're all whites. You could take it here because your risk is reasonably small on a 5-minute chart. Down to it would be 3, 4, 5, 6, even to the bottom of the cloud. So this would be an interesting place to go. Let's see, we've got 16. So 4 or 5 pip risk to get 16 is a 4-to-1 nice return. Let's see how this looks on a larger time frame, and then we'll shut it down for today. Here we are. You can see right away what a beautiful situation this trade was, and this was once again last Friday. And the double whammy with Itchimoku really kind of helped us to see how brilliantly this whole template can power up our trading. We had a situation where we came above here, even if we came down and went all the way down to here, 23 pips, 25 pips, all the way up to 90. So there's a 4-to-1 and a $900 day on a full contract on Friday afternoon. Likewise here, down we go, pull back. You want to get as close to the chandelier as possible so as to eliminate your risk. Once again, this is a 30-minute chart on a hot mover, so it's going to have a little wider pip range. Up here we go to 13 pips. Down here we go to 71. Not a bad risk reward and not a bad return. We'll be doing some more scalping and some more trading using these charts over time. I invite you to look at all 3 videos, and I hope that this particular one is going to be of help to you as you can add it in. If you need any of these indicators, please go over to fxfortunehunter.com, leave me a quick email or a message on the message board. I can get you the Dropbox location for sure. It's not a file that's supported by WordPress, so as a result, the executable needs to be downloaded by you, but I can get you that if you send me a quick email. I hope this helps. Please subscribe to our YouTube channel, like this video, give us a comment, let us know what you'd like to talk about next. See you next time.